Hey, good morning, everybody. Today is Friday, January 29th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The N in CANSLIM stands for something new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term earnings growth. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors, Spectrum Analyzer to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 16 came from integrated utilities, 13 from utility networks, 6 from restaurants, 6 from semiconductor devices, and rounding out the top 5, we had apparel, accessory, and design, packaged food, and beverages, all with 5 stocks each in the 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of semiconductor devices recently. We've been seeing a lot of restaurants recently. We've also seen a lot of utilities, but utilities I don't think are going to be a place that we look for leadership in the market going forward. Restaurants and semiconductors, however, may be a good place to look for leadership. Let's start today with a look at the Russell 2000. Russell yesterday had another inside day. Notice how the low of the day was higher than the low of the prior day, and the high of the day was lower than the high of the prior day. The Russell yesterday was only able to eke out a small gain, 0.05%. As you know, I think the Russell is the key to the market going forward here, and the Russell really needs to take out resistance here in the 1040 area. We'll watch to see if we can do that. In the meantime, we have this old channel line, which may also offer some resistance going forward. We'll keep an eye on the Russell, see if we can capture these levels of resistance. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking, this is the most important element. So let's take a brief look at the market. Stocks limped to small gains yesterday, with the Russell 2000 eking out a 0.05% gain. Trading volume was mixed, higher on the NASDAQ, but lower on the New York Stock Exchange. That noted, according to our market timing model, we remain on a primary sell signal with a secondary aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. We noted yesterday that after the sharp sell-off on Wednesday, the internal damage to the market wasn't tremendous. Yesterday, the market exhibited constructive consolidation behavior and may be preparing for a more sustained move to the upside. Advancing issues outpaced decliners by a 2-to-1 margin yesterday. The New York Stock Exchange advanced decline line continues to look considerably more bearish than bullish. New lows continued to better new highs, but by a reasonable level yesterday, and our new high, new low indicator has switched to a buy rating on the market. The new high, new low measures the overall rate of change in the daily new highs versus the rate of change in the new lows, and is typically one of the first indicators to signal a change in market direction, positive or negative. The McClellan oscillator continues to oscillate, turning positive again yesterday, indicating a buy signal on the market. In spite of the relative weakness noted above in the Russell, large capitalization stocks barely edged small yesterday, but they continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Okay, yesterday, the NASDAQ Composite was up 38.51 points, or 0.86%. We closed at 45.06, which is right smack on resistance. We'll see if we can better that resistance level today. We have support resistance right here at 45.06, right where the market closed. Trading volume yesterday was higher than the prior day, giving us an accumulation day, which should make the bulls happy. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in a confirmed uptrend in the market since January 26th. Right now, the NASDAQ is bracketed by support down here in the 42.92 area. I certainly hope that we don't get down there. We have this support resistance area in the 45.06 range. If we were to recapture that area, that would become support. If we break down here, that area would become resistance. Right now, our next significant level of resistance is this trend line. This trend line goes all the way back to the beginning of the bull market in 2009 and could provide significant resistance for the NASDAQ. While O'Neill is indicating an uptrend under pressure, we continue to remain on a primary sell signal on our market timing model, but we have an aggressive buy signal at this point, which indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. Let's see what the S&P 500 is up to. S&P yesterday was up 10.41 points, or a little bit better than 0.5%. We closed at 1893. Trading volume was below the prior day, and so we didn't get an accumulation day on the S&P like we did on the NASDAQ. The S&P is in an uptrend under pressure. We've been in an uptrend since January 26th. Right now, we are bracketed by support down here in the 1867 area and resistance at this trend line. That's the 2009 to today trend line that we mentioned on the NASDAQ and may offer considerable resistance at this point. If we were to break through that trend line, our next area of resistance is up here in the 1993 range. Like the NASDAQ, our market timing model is indicating a sell signal on the S&P 500, but we do have an aggressive buy signal. Before we go, I want to talk about two stocks that we've talked about earlier this week. TAL Education Group is a Chinese provider of K through 12 after-school tutoring services to roughly 1.5 million students via 289 learning centers in 19 cities. The stock has been working on this fifth stage base. The fifth stage base is an awfully late stage base, and if we're going to invest in TAL, we want to keep our stops very tight. On Monday of this week, I noted this trend line, and you'll note that on Wednesday we broke above that trend line, and yesterday we continued to move higher. Next area that we might consider buying TAL is up here in the 48.84 area. That's our pivot point. TAL gets an 80% checklist rating, and note the volume that we've had in the past couple of trading days, well above average. Actually, we had a nice pocket pivot yesterday in TAL. Next, I want to take a look at Facebook. Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. I think we all know what Facebook does. Facebook's been working on this first stage base, and as we noted yesterday, Facebook posted great earnings on Wednesday night after the close. The stock gapped above this trend line right here and became a buy at the open. Hopefully you folks were able to get into Facebook at the open. If you weren't able to, we have a pivot point of $110.65. That would be the next logical entry point. Facebook gets a 76% checklist rating. Just a reminder before we go, this is a tricky market. I do believe that the market's more bullish short term than bearish at this point, but be careful. Keep your stops in place. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.